Jahangir, let me kickstart the chat with you. Has Fed pretty much played and indicated on expected lines? Do you think the game plan is completely clear of what Fed will do in next 12 to 18 months?
More or less, right? The Fed on balance was slightly more hawkish and a bit more hopeful. I think we had the Fed reaching about 2.8, the Fed funds rate reaching about 2.8% in 2024. Now they've brought it forward. At least the median dots have brought it forward to 2023. We had 7 rate hikes in 2022 of 25 basis points. Again, the median are suggesting 7.5, which basically means there's a 50 basis points of rate hikes in 2022. I think what most likely, given the language of the Fed of the FOMC, you will probably see QT starting probably in May. We had it in June. So it's a bit more hawkish, but clearly it's much more hopeful. It sees the economy withstanding it. Growth in 2022 and in 2023 are both above potential of 1.8%. So it's about 2.2% and 2%. And inflation goes down to about 2.3% at the end of 2023. That's still above 2%, which is usually the Fed's target. So they are willing to tolerate a little bit more inflation. So I think all in all, it was a story which was it was a policy which was a bit more hawkish than what we had in mind, but it was clearly a very hopeful message.
Anurag, do you think the adjustment in the bond market is still not done, given that next 2 years the Fed rate would be above the neutral rate of 2.4? Do you think the bond market will sell off further, and by the time things will settle for the 10-year paper, it could be closer to 3, not even 2.5?
Yeah, Nikunj, morning. Yes, Nikunj, I completely agree. I think the adjustment in the bond markets is not yet completely done. Because look, Nikunj, I think I think good part here is that Fed has given this certainty very clearly that they're going to be a hawk. I think the most important statement that I took out of the meeting today was that full employment in the long term is also not feasible until we have price stability. So I think Fed is going to be a hawk. That is completely out of the way. I think despite all the nuances that people are putting, there is political uncertainty and other things. I think Fed is very clearly laid out that they are going to prioritize inflation and price stability. That's the biggest number they're going to chase. I think the bond markets, Nikunj, will adjust, but I would say there are still 2 schools of thought. There is, and it's kind of 50-50 now, Nikunj, so much that one school believes still wants to work with the technology stocks. They are saying that Fed is kind of behind the curve. Of course, everybody knows that, but they're going too slow and they're too behind and too fast. The other school of thought, which is more pragmatic, is saying that economy is resilient and can absorb all the shocks. I belong to that school of thought, Nikunj. I believe this is long overdue, and I think economy is completely capable of absorbing this faster rate hike. So I like that move.
Anurag, also from purely what one is seeing across asset classes, I mean, your point in bond markets aside, but the fact that crude has seen a significant spiral down from those elevated $130 per barrel levels. Now we are a little around that $100 per barrel mark. We've all seen what's happening with equity markets as well. Does it seem like now with the Fed event behind us, Ukraine, Russia, pretty much well digested news, at least the worst could be behind us now at this juncture in terms of how the oil markets and equity markets are going to pan out?
Yeah, Aisha, of course, I think last couple of weeks I've been kind of little on the sidelines, but I think we are beginning to hear, we can't predict geopolitics, but I think we are beginning to hear good news about certain compromises being made. My favorite line on this is that if you want to track corporate deals, try and track the corporate jets where they are moving. I think there's a lot of travel happening in the background. Biden is traveling next week. Of course, they're not going to discuss environment with NATO. So I think there are things happening in the background which point towards a more stable and positive news coming from geopolitics. While this one is out of the way, I think markets can get back to their stable, predictable regime that we had kind of thrown out of the whack in the last couple of years post-pandemic.
Aziz, good morning. This is Nantara coming in. For a lot of our viewers back home, as the US fights the fastest inflation it's seen in 4 decades, a lot will be wondering, what about India now? What about the RBI? Any rate hike possibilities here while all the adjustments are still taking place? What are your views?
Is that a question for me?
Yes.
So, look, we've had this call almost for 6-7 months now that the RBI will take its time. The economy remains very fragile. In addition to that, even the core inflation has been stubborn at around 6%. The RBI is going to see through much of the supply side dynamics and is going to allow itself as much time as possible. Pressures emerging on the current account and on the exchange rate because of the higher oil prices. And even though oil prices have come down from the 130 levels, remember, on an average, it is still about significantly higher than the $70 a barrel average we saw last year. But we have a first call of a rate hike in June. I would say that if concerns over the COVID-19 related or the outbreak of COVID of the Omicron wave in China softens the region's growth, and I think that's now a much bigger concern than, let's say, what's happening on Russia-Ukraine front. My sense is that even June could be postponed, and you would see significant amount of bond purchases being done by the RBI in order to keep the bond market from moving up, in a disruptive manner. So June, perhaps, even that might be delayed.
Okay, so you think that the RBI will hold fire even beyond June before it decides on any decision. I'd like to thank both the gentlemen for joining us live today, right here on the market, to decode the big global event, the FOMC. Now that's out of the way, ladies and gentlemen, like Nikunj was pointing out. We have a lot lined up for you on the show today. Let's take you through what you can expect all the way till 11 a.m. Here's a tweet teaser of what's coming up for you on the market. And